two, 1, 2. Two, two, 1, 2, 1, 2.
one of the most important objects in the entire British Museum, and that's really saying something given the kind of collections we have here, but it's true. This is the Boomerang casket, and on the front you can see an image of the Buddha, and it's actually the earliest datable image of the Buddha in human form. I'm going to be talking to you about one of the most important objects in the entire British Museum, and that's really saying something given the kind of collections we have here, but this is the Boomerang casket, and on the front you can see an image of the Buddha, and it's actually the earliest datable image of the Buddha in human form.
1 2 1 2. Testing 1 2. 1 2 1 2.
Yeah. Hello, is it working? Yeah, good. Yeah. Yeah. That's great. Thank you.
Okay. Do I need to press a button? No. Hi, everybody. Welcome. Very warm welcome to Goldsmiths Hall this afternoon. Thank you very much for coming. Today is our final event in a year-long calendar of events and other activities to commemorate the centenary of the LBMA Gold Prize. It's been truly fascinating delving into the story of the gold price this year. We looked at the impact of the First World War to the global economy and the subsequent first ever gold price auction on the 12th of September, excuse me, 1919. For those who are history buffs in the room, what an incredible century it was to follow. And for those of you who worked closely with the gold price during that time, what an incredible experience you must have had. So turning to today's seminar, our speakers have prepared some great presentations for you. So without further ado, I'll introduce our first speaker today. It's Dr. Robert Organ, Deputy Warden of the Assay Office, London. Robert joined the Assay Office, London in 2000 as Superintendent Assayer and took over as Deputy Warden in 2006. Over to you, Robert. Thank you.
So the title Deputy Warden means the assay master is another term which is used for somebody like me, or the Managing Director. And I'm of the Assay Office here at Goldsmiths Hall. And the Assay Office is actually above when you have your dinner tonight. On top of that, and it's been here in this building since 1835 when this building opened. So a very long time. But of course, this is the third building on the site where hallmarking began, and that is almost 700 years ago. So I'm going to tell you a little bit about the Goldsmiths Company. It was set up from the trade guilds in the 12th and 13th centuries, and it's called a city livery company. And livery refers to the cloaks that its members used to wear, so they can differentiate this company from the other companies, livery companies in the city. And to trade in the city, so the members of the company, called freemen, from which are drawn the livery, as I've talked about. Then you have assistants, wardens, and a prime warden. And the prime warden changes every year, and the assistants are the sort of the board, I suppose, of the company. But in the eyes of the law, livery nobody actually owns us. Livery companies are considered to be an individual that never dies. And so these livery companies are very wealthy organizations, and where they get their wealth from is that when the members, the freemen, and you've got to remember now, this was many, many years ago, this was a Catholic country. So when they died, they could either leave the money to the crown, they could leave it to the church, or they could leave it to their livery companies, and in return, the livery company would look after the family. So a lot of people did this, and of course that was real estate, which was left, which is now used by the company, takes money from that. And it still continues its charitable ambitions, gives a lot of money to charity, continues to run the assay office, which we'll talk about in a moment. And the other thing it does, it supports the craft of goldsmithing and silversmithing. And a few years ago, we opened the Goldsmith Centre, which is a £17.5 million investment into a building which is a community for silversmiths and goldsmiths. There's pre-apprentice, post-apprentice training studios. One of the things that we do to support the trade, like Goldsmiths Fair, which happens every October, apprenticeships, which are as long as not older than hallmarking. And the other things which you see there is that you see that this building is used frequently for films. So I'll give you some examples of the most recent thing you'll see soon is the Tesco advert for Christmas. We've been in Downton Abbey. Transformers, believe it or not, was familiar. The Queen with Helen Mirren, The Lost Prince. And of course, we've had Britain's Got Talent was in here. And that was that was a very interesting thing. It was the time when they tell them if they're going through to the live shows at the end. And if they went through one door for lunch in one of the places opposite. If not, they're just booted out onto the street sort of thing, cruelly. And of course, they're all milling about this place, and Simon Cowell comes in with his big Bentley through the front door, gives us 800 quid and tells us he's going to smoke 10 cigarettes, for which there's an £80 fine if caught. Alicia comes through the assay office door and says to all of our staff, "Oh, I look like a dog without my makeup." So they were all milling about the place. A really interesting time. Look after our members and out for events like you're having. It was about 1300 to 1327. And this is, if you imagine down in the Mint in South Wales, yeah, the coins are come off, and this thing called the Trial of the Biggs Order says you've got to take one coin out of every 1,000 and put them into, or 10,000, into a box called a pyx. That's brought up here to Goldsmiths Hall for a formal trial by a senior High Court judge called the Queen's Remembrancer. And it's actually test the coins after the trial starts. It's then adjourned, and we test the coins for their weight and their diameter and their composition. And this still takes place today to show that our coinage is independently tested and up to the right levels. And of course, there's still lots of investment and commemorative coins which are made of gold, silver, and platinum, which we do. Now, the assay office, which started here in Goldsmiths Hall, is now across works across 5 sites. The main office is manufacturer, Hatton Garden to service the local area there in Greville Street, and of course a bigger office at Heathrow Airport in the Brinks facility. And trade took place. This is where everything took place, and that's why it's here. But of course, these days, over 95% of all jewellery sold in the UK is probably imported from China, which is at Heathrow Airport. So let's now move to hallmarking. If you've got pure gold, it's a very soft material, not much good for anything, a bit like a chocolate teapot, goes in the gold, and then you can make, it hardens it, these things, same with silver. And the problem is, of course, you can't tell how much of the pure gold is in the alloy. You can't tell by touch, taste, smell, color, nothing. So what happened is that in 1327, we were given a royal charter, that's nearly 700 years ago, which said that gold should be no less than the touch of Paris, which is 19.2 carats, 24 carats being 100% gold. And silver should be no less than the sterling coinage of the day, 92.5%. So stuff, we actually used to go out in the early days and test it on people's premises. And once it was up to standard, they marked it with the mark of the king, which was, well, this is the interesting thing. This is actually supposed to be a lion, but that looks more like a monkey, doesn't it, really? But of course, they didn't have David Attenborough in those days, did they? who could tell you. And gold and silver were marked with the same mark, which was the leopard's head, which is the town mark for London, mark of the king. And of course, the king still plays a big interest, the future king anyway. And this was set up in the room next door where you were for your lunch. And Charles and Camilla came, and this was to mark the first Queen's Diamond Jubilee mark in 2012. So he came along, and we asked him, would you like to mark it yourself and have a go? And Camilla encouraged him, said, yes, go on, have a go. And then he did, fair play. He marked that piece, which you can see happening there. And she turned around to the press and everybody and said, I bet he lit his thumb. Which, the reason for that, he was wearing one of these blue plasters, which, so he'd been obviously cutting something up the day before. But that was a great day for us. And hallmarking as we know it didn't start till 14th, when it becomes more recognizable to today. And this is when people, instead of us going out, they had to come in here to Goldsmiths Hall for things to be marked. Hence the term hallmarking. And the start of like the format of the current hallmark started now. So you had mark on the left-hand side there is the person who brought it in, the maker, his symbol for it. Then you have the leopard's head, and then you have a date letter. And that date letter used to change on St. Dunstan's Day, which is in May. And it used to signify the person in charge of the assay office at the time. So that's my position, basically, the person in charge of the assay office. And so that they knew who it was, they introduced this date letter for that. So that was like the first hallmark as we know it. As I said, in the early days, they used to just use the leopard's head. But it wasn't until a bit later that you started to get individual marks for specific finenesses of lowered the currency. They made it less in silver than sterling to show that silverware was still up to standard. This is what was still sterling standard. This is why they introduced this lion passant guardant. And then a bit later on, restored the standard for coins back to sterling, but people then started clipping the coins, which meant cutting the edges off. Also, as well, in the 18th century, we had the introduction of duty marks, and that was the bust of the monarch at the time, and people had to pay 6 pence per ounce for silver as a tax. Gold, like 18 carat, came in 1798, which was the symbol 18, 22, 1844, and 14 carat in 1932. Of the mark as we know it, which I'd like now to bring you up to date with the current legislation and what the mark looks like now. So the Hallmarking Act, introduced in 1973, and it says it's an offence for any person in the course of trade or business to apply to an unhallmarked article of description indicated that it's wholly or partly made of gold, silver, platinum, or palladium. There are now 4 UK assay offices: London, Birmingham, Sheffield, and Edinburgh. Described as gold should be hallmarked. Silver, 7.78 grams. A silver ring is less than that. So really, silver jewelry, you won't see hallmark because it's too light. And platinum is 0.5 gram, and palladium is 1 gram as well. And some descriptions like royal gold or gold plated. Jewelry being sold or silverware, they should have this with dealer's notice up for sale, which tells you about hallmarking. You can have a fine if you don't show it. It is available free, and you can also buy very nice, copies of it. So wherever you see gold and silver, you should see this, but you won't very often because there's not enough enforcement really to show this. And enforcement is not carried out by the assay offices. It's the assay office put the hallmark on, and even though they have powers to enforce, they never use them because that's carried out by trading standards. And all that this just shows the hierarchy is part of BAYS. British Hallmarking Council is a regulatory body, and the 4 assay offices do the hallmarking. So let's have a look at the current hallmark. The first thing is marking, and it comprises the initials of the person in a shield design, and I'll come on to that in a moment. You have the millesimal fineness mark, which is the parts per thousand of the pure metal in the alloy, 925 parts per thousand, 92.5%, sterling silver. And then you have the assay office mark, the leopard for London. Commemorative mark, and as I said, the last one was for the Diamond Jubilee, wasn't it? What was the one in 2012? Diamond? Yes, I think it was. And that's what the mark looks like. And I liken this mark, if you're all Doctor Who, that's what people often ask about me, but Doctor Who has a TARDIS, doesn't he? And I liken the hallmark to a TARDIS because it gives you so much information, even though it's just a little mark. It tells you who marked it, what it's made of, where it was tested, like that in the future. So the sponsors mark, there may be lots of people with my initials, RMO, but you put a shield around it, a shield design around it. So that then becomes, say if I had RMO in design 20, nobody else can ever have that for perpetuity. Sponsors mark, unique to the individual who sent it in or caused it. 375 up to 22 carat. The traditional symbol for gold was a crown. Titania, we've dealt with those. Platinum 950 is an orb, and palladium metals to be hallmarked is the head of the hallmark in recent years, because palladium was used in things from about the 1950s in China and other countries in the world, and nobody was doing anything here. But when the hallmark was introduced about 10 years ago now, people started making things now out of palladium. So palladium, the hallmarking, was the key that unlocked the door for palladium to become a successful metal for making jewelry. So that's the success of hallmarking. These are some of the commemorative marks, and the next one now might be the Platinum Jubilee, but we're only beginning to discuss that now, because it's treason, isn't it, to actually look at the Queen's future, or whatever it is, isn't it, and speculate on the Queen's future. But sooner or later, we'd have to give that some thought. These are the current assay office marks. Now, there's two things about this. First of all, there used to be a lot more assay offices. There used to be assay office wherever something was traded. So, for instance, Exeter for the wool, Chester for the wool, Norwich for the grain. And a horrible thought was that in Bristol, they used to trade silver for slaves. There was an assay office there. What an awful thought. And then, of course, you had the Industrial Revolution, and you had then the big offices which opened in Sheffield and Birmingham. And it's interesting where they get their names and why they chose to use an anchor. And basically at the time, it used to be a rose Sheffield had. Because what happened is that in those industrial figures was pushing this and took it through Parliament. And it was granted that they could have assay offices now in Birmingham and Sheffield. And they were thinking, well, what marks are we going to use? So they were actually in the Rose and Anchor pub on the Strand. And as you can see, Birmingham got the anchor and Sheffield had the rose, which they later changed now to the, sorry, they had the crown and anchor. They originally had the crown, and then they chose the rose a bit later on, sort of thing. So that's how the names go. Now, what you'll actually see here is that the Birmingham office, they actually have a sub-office in India. And there's a lot of fuss about this a few years ago, that the people in Birmingham, the traders in Birmingham, didn't like the fact that they were using the same mark, because there was historical relations, really, about the mark, because it was set up by the trade. As I said, Matthew Bolton set it up. It was part of the trade. And of course, they didn't like the fact that this was being marked in India. And there was a big fuss about it, even though I'm sure it was absolutely to show that it was made not in the UK. So hallmark, proud in the assay office here, because hallmarking, which started in this building, is now marked by all of those countries. They have a system you see in blue. So it started here and has gone all over the world. The only trouble is with all of those is that they are part of the competition these days. And if we look at now something, other marks in the UK relates to having mutual recognition between countries. So if you look at all of these, some of these countries which you saw have compulsory hallmarking systems like ours. Some have voluntary systems where you can put it on if you want to, and some have like manufacturers run assay offices. So some are state run, some are privately run like us, some different reasons for it. In France, hallmarking is for tax rather than consumer protection. And of course, in 1973, there were 7 countries at the time, but now you have 20 countries all signed this agreement called the Hallmarking Convention. So they've signed this, which means that items marked in, say, the UK with what's called a convention mark can be accepted in all the other countries who signed this convention without further hallmarking. And the convention mark looks very similar to the marks which you saw, but it's got that additional one, the second one in, called the common control mark, which is the finest mark in a set of scales. So marks from other countries are allowed in the UK if they have that common control mark. This is the last of the boring bit. The mutual recognition, the Whipper regulation. What it means is that you have to accept the hallmark countries if they're done in the same way as us. But of course, the mutual recognition because of the EU once we leave. And this has, we've already lost business from a major American manufacturer who's now made arrangements so that they would still have this access and diminution arrangements. And of course, the elephant in the room was Brexit. And of course, the chap in charge of it was Donald Tusk, wasn't it? So I'm trying my best here. It is, it's a simple 3-step process, back again, which is sampling, assaying, and marking. So we do about 2.5 million items a year, which come in 100,000 packets. We don't actually test every single item, but we hallmark every item. So if there's 1 item in a packet, we will definitely test that. If there's 10 items in a packet, we'll test 1 or 2. Sampling, you sample it. Then we assay it, test it what it is, then we mark it. So I've got a little short video which goes through the process. On it shines X-rays at it, gives off its own X-rays, and from that you can know how much of the pure metal is in the alloy. We used to have a laboratory, but XRF is more than adequate for us. But for your stuff, which you do, bullion bars, you'd never dream of using XRF for it, because you'd need to use one of the standard methods. But it's fine, it's good enough for hallmarking. It's only pass or fail. It's not actually giving a quantification of the bar like you might use. So we've seen a little bit of this. And these are some of the traditional means which we used to use. The touchstone, have you heard the term touchstone before? That's one of the oldest methods. This is actually smelting of a bar, not actually cupellation. They got that wrong. We use ICP for platinum. But I'll move on to the next bit. There are 2, this is now marking. So there are 2 methods of marking. There's using a punch and using it. I have another video to show these being done. So this is the tradition, which is using a punch and hitting it into the object, moving the metal, and this is the laser. It takes 4 years to train somebody to do this, and most of them used to be former apprentices, so that's how we train them. So it's a very skillful thing to do, because if I hit something with a hammer, I destroy it. So you've got to be careful. You've got to know what you're doing and use the special tools. Use the tools which he's using to do that. This is moving on to laser marking, I think. See, this is the problem. When you hit something with a hammer, punch, you get some bruising, as we call it. And sometimes you have to use, remove that. And this is how we do the laser marking. And the beauty of this is it only needs a quick wipe over afterwards. There's no movement of the metal and no chance of it being destroyed. And we have 2D marking and 3D marking, and this is the only assay offices in the world where you can get a full 3D mark, as you can see there afterwards. It's not quite as robust, we don't think, as the struck mark. It's still fine if you're not using the object, but it's just on display. And what I'll do now is just show you the different types, how things have developed. So the struck mark is across the top. If you look at the bottom then, the 2D laser mark, that was the first ones we used to use. Then we had the old 3D laser mark, which is like an extrusion in the third dimension, but not really 3D. And then the new 3D marks later than that. And I think that that is fantastic. And the other thing, you could argue now that all things are marked by a laser mark because we make the punches using a laser. So it's interesting. Well, now I'm going to show you some, this is nice. I'm going to show you some very interesting objects that we've marked. The chap on the left-hand side is our tea maker, and he is a very big stirrer, as you can tell, and that was made of Britannia silver. You had the model by Mark Quinn of Cape Moss, made of solid gold, medals from 2012. And these Olympic medals are, the gold medal is not actually made of gold, it's made of silver. I think 4 grams of gold in the alloy and heavy gold plating on the outside. And it was a beautiful medal though. It took 14 different presses to build up the texture of it. And it's actually marked where my finger from my right hand is on the bit where you put the strap through. That's where it was marked. But this is really good for 2 reasons. Of course, it was the first time the Olympic Games medals were even hallmarked. And as you might tell from my accent, this is a far more important reason. It was actually the first item marked in Wales. So that's why I like it. But we went down to the Mint to actually put it on. There was a great deal of secrecy. That was a great day out. Now, I'm just going to finish with some, like, the signature on a painting. And if you're a famous silversmith like Paul Storr, the left-hand side PS, or down the bottom, Paul de Lamoury, it starts to add several noughts onto the price of the object. Famous makers, and this allows them to be identified. The hallmark can become part of the design of the piece. So you see displaying hallmarks on the outside, it makes it you know, a work of art sort of thing. And then hallmarking is an incredible, powerful marketing tool. It's a symbol of Britishness. It started here. The UK assay offices are the best in the world, and we've done this for 700 years. And it legitimizes the product, as I said with palladium, it's one of the big success stories for hallmarking. And of course, the commemoration marks and the date letter can indicate certain births, weddings, engagements, etc. So they're all visits. It's a great marketing tool. And the other thing as well, it adds to the ability to detect fakes. So you have hallmarking and scientific measurement. Those things exist with knowledge and connoisseurship to bring what I call together I call that the authentication tripos, which is a 3-legged stool. But each of those 3 things is so useful for looking at fake hallmarks. So I'm just going to leave you with this final slide. So hallmarking, 700 years old, and is saving us from cheating pests for 700 years. And you'll see a little animation in a moment. You can see the different leopard's heads. This is, you know, and it's got a cockroach in his mouth. And it does say, thank you very much for listening. Great. Questions or anything like that? Anybody want to ask anything?
I just wonder what sort of percentage of fails you get.
It's interesting. It's worse now than it's ever been in the past. I'll tell you why it's worse now. You get, do you know, retailers like Net-a-Porter and other like consolidator type people who sell different things, even Amazon, clear about hallmarking. So you often find problems when you test it, like below standard solders and other things, but it's 6%. In the past, it used to be well below 1%. If you went back 10, 15 years, it's gone to 6%. And that causes all sorts of problems in terms of your efficiencies, because you have to deal with it. It's a real pain in the backside. And the other things which have changed is, as I said earlier, so much comes from abroad. It's all in finished condition. It's all bagged and tagged and wrapped. Because people like variety these days, there's more limited numbers of ranges, more ranges of stuff. And we're basically, as much as we are a hallmarker, we're an unpacker and a repacker. You've got to unpack it, mark it, put it back in, and there's often 5 or 6 different layers before you get to the goods. So a very tricky sort of the modern environment, hallmarking. And of course, I'll just give you one statistic to finish. When I started, we were marking in the UK 37 million articles a year between all 4 offices. We're doing less than 9 million now. So we're down to less than a third of where we used to be. It's been absolutely, it's not decimated, it's been absolutely devastated, the market for hallmarking. All our services have lost jobs and work. Very tough time. It's just got a large part of it, and you will know this more than me, is the gold price. If you look at hallmarking and the gold price, there's an absolute linear relationship. So when the gold price is high, hallmarking is low. When it's low, which it was 10, 20 years ago, we had these massive highs in hallmarking. It's directly proportional. If you look into the future, the really big issue, and we're beginning to address this now, is the amount being sold online and how much, probably 40% of everything gold or silver items being bought online are problematical, hallmarked, below standard, or just not purporting what they are. So that's the battlefield for the future, is getting people to hallmark online. Well, we were on Channel 5 News with it quite recently, and this is going to be a major project coming forward for us, is to look at the enforcement of the Hallmarking Act. You've got to remember the Hallmarking Act came up before the internet was popular. So is it safe to do it? And you know, is it suitable as a vehicle to enforce the act? So there's a lot to be done. Yeah.
Very quick question, if I may. Coming off of non-delivery companies, as the Goldsmiths company, are you also a charitable institution, so that controls what happens within the company?
It is, yes. So the Goldsmiths company is, first of all, these are private entities, but it does have a charitable arm. But this is, the Assay Office itself is not, the Assay Office isn't a charity itself. No. But we do a lot of other things related to it. For instance, we've just, and this is run by the Assay Office, is that we've sponsored, we're very keen about the future, we're passionate about education, and we've sponsored up to 10 PhDs in Cambridge University to look at the future materials used for jewellery. And we got some fantastic things coming out, looking at gold, metallic glass golds, and colouring of golds, and also using shape memory gold alloys. So we're doing some fantastic research to secure the UK as the leading centre for looking at jewellery alloys. So, and that bit comes from the charitable side, not hallmark. It has to be run as a business. Yeah. The people we have on our board to run the Assay Office, one is the former chief executive of Johnson Matthey. He's my boss, as it were, the chairman of the board, and the other is the He's the chairman of KPMG, former chairman. So I can't get away with anything. Yeah, as much as I'd like to, really. Yeah. But it's a tough time, Hallmark. It's not a business you start up now. Definitely not. But we're very proud of our history. And of course, it's the name hallmarking. It means quality. Yeah. Great. I don't know how I did for time. Oh, right, good. Yes, yeah. Thank you very much.
Thank you very much, Dr. Robert Organ. Some food for thought for those of you who are considering buying some jewellery this Christmas, maybe. So our next speaker is Dr. Stuart Murray, former Chief Executive of the LBMA, and he continues to work with us very closely indeed. He's going to tell you a little bit about the kind of status update, basically, on where he's got to in some phenomenal research that he's been doing for us in preparation for an online exhibition that we will be launching next year. So I'm going to hand it over to Stuart. After Stuart, we're going to have a short break, a coffee break outside, and then we'll come back for the last couple of speakers.
How long do you want me to speak for? Seriously? I mean, I can do this in 5, 10, 15. Okay. So, this is Cassiopeia A. This is an exploding supernovae that was first noted probably in 1680 or thereabouts. Astrophysics is the most mind-boggling science of all. I really wish I'd studied it because it is just fantastically interesting. This supernovae, which is in our own galaxy, it's about 10,000 light years away. So it was 10,000 plus 300 years ago that this actually exploded. And it's in supernovae like this are formed, and it goes on and on. I haven't got time to explain this in any further detail, but this will be the first item in our exhibition called The Birth of Gold. So I want to thank the LBMA for asking me to undertake this work. It's been just absolutely fantastic. I'm really enjoying this like nothing else I've ever done in my career. It is really, really very interesting. And what we want to do is to inspire people who are interested in gold. We want to provide a source of information, maybe even reference. We want to surprise you by thinking, what should we do? Should it just be our history, meaning the LBMA, or maybe the London gold market? Should it just be the past century? We can maybe talk about that later. Should it just be the UK? And that's what it is. The whole history of gold, this fantastic, totally absorbing subject. And we started off with a grid that puts everything in the history in some place. I don't think you can really see it, but it doesn't matter. This is about the 10th iteration. And this is necessary in order to categorize all the different items that we're going to be looking at. And classification in this way is not straightforward because, for instance, you take this, the first great train robbery. I don't know if any of you saw that film. It was a brilliant film. Came out in 1978 with Sean Connery and others. But it was an original heist in 1855. They actually stole gold in the UK, all the major ones, and list all the feature films that had gold in it in some way. You can see there's a kind of intersection, and we've got I don't know if any of you saw the runaway bus, but there was a gold dealer in that, central to the story. The Wizard of Oz was all about the gold standard, actually. I won't go into all the rest. But actually, when you think about it, there was also a book. So our Venn diagram should have a third circle, which is books mentioning gold. There was a book of the first great train robbery. So this is what an item looks like. An item is basically a Word document. It's got a picture, a visually appealing picture. That was the instruction from Ruth. And I think we've got lots of visually appealing pictures to put in. We give credit to the photographer or the owner of the item. We may have QVs. QV, Rebecca was asking me what this meant. I didn't know at the time. It means quo vide, which means look it up. So we might have QVs like that, or we might just have them like in Wikipedia, where it's just a hyperlink. We put dimensions or other characteristics of the item that we're showing. And interestingly, we can have external links, not to be outdone by Robert. I've got
I'm going to be talking to you
external link.
collections we have here, but it's true. This is the Boomerang casket, and on the front you can see an image of the Buddha, and it's actually the earliest datable image of the Buddha in human form.
The full video goes on for some time, and it's very interesting. So we will proceed. Metadata is something you don't really need to know about, but it's really vital to have a certain amount of information about the items, which is hidden, but which allows the whole structure to work. We're basically talking about a structure, I used to call it a Christmas tree. We need a structure that we can hang all our baubles on and will help people to navigate their way through all these items. And we haven't yet got that structure. We are working on how we develop it. So we need all this kind of extra data. And as far as sources is concerned, well, there are a lot of people that I need to thank. I really can't do it all today, but there's all sorts of sources. I call it hard matter, printed matter, soft matter, and gray matter. Gray matter is very important because this is people's memories. A number of you here are in my little brains trust, and we have our brainstorming meetings where you give me ideas, and that's been extremely useful. And then we've got the cloud, we've got collections, most of which I have not seen. There is a need to select things, much as I'd like absolutely everything. We're going to have to leave some things out. There's the time and effort to produce good content, to prepare it, and to fact check it. I mean, I do want us to avoid having fake news in this particular collection. And then there are sometimes legal constraints about what we can and finished items, and about 700 ideas, which we're developing. As I said, we need to develop that infrastructure to enable people to navigate their way around. We'll launch sometime in the new year, date yet to be established. And then I hope we will continue to develop. And as we get more items in, we will add more items to our original idea. And to me, this was great because I didn't even know that you got gold. Now, apparently you did a long time ago. And in the middle of the 20th century and gifted to the Bank of England, which is why it survives. Because most nuggets, the large ones, a lot of them, unfortunately, just disappeared. We have next 4600 BC. This is Lake Valley, the necropolis there. This was mankind's first attempt using jewelry. Amazingly, they then just buried it all. Sometimes they buried it even without a skeleton. We think that's a bit strange, but that was the way they did things. As someone said earlier, gold is pretty useless. This is a fantastic item from mold in Flint. Lots of people had little pieces, and they eventually all come together. I don't know if you remember the film Terminator, where all the little bits of mercury come together. Over the years, the British Museum put all these together all the way around the back. It's not just the front. Fantastic, fantastic workmanship from 2000 BC. Truly a fantastic piece from 2000 AD, produced by someone called Malcolm Appleby for the millennium. It was used to contain wildflower seeds, which were then scattered and sown all around the country. Very nice item. This is from Gochran in Russia, who told me about this item. the fire technique. This involves grinding up gold, dissolving in mercury, laying the mercury in copper sheets, and then heating it up to evaporate the mercury and leave the gold on top of the copper. And apparently 60 men died of mercury poisoning while doing this work. But this is a very nice one. This is the younger, a fantastic, hard-working, and very young Prime Minister. He was the first Prime Minister of the United Kingdom in 1800. But he stopped people cashing their notes in for gold for about almost 25 years towards the end of the Napoleonic Wars. And Gilray did these lovely satirical cartoons of the Prime Minister about to ravish, it's called political ravishment, the old lady of Threadneedle Street. And I have read, I don't know if it's true, that this is where the old lady of, what wonderful stuff we've got on this, and that will all be in the exhibition as well. The Bundesbank has been tremendously helpful. They sent me this picture from their fantastic book called Germany's Gold. This is a picture of a certificated bar. It's got no assay on it, but it was accompanied by a certificate. You can just about see the certificate. This is dating from 1937. It doesn't really make it very clear what the fineness is, but that's the way it used to be done. You could have a certificate instead of a fineness mark on the bar. In 2006, the LBMA stopped that. From then on, no certificated bars were considered to be good delivery, but they are still gold. I'm obliged to Alan Baker for this. This came up at our brainstorming meeting. This is the Ultronic Stockmaster, to use the F word briefly. Nice with old friends. And here's one, just another group of old friends. This is Nigel Munt's farewell party in 2007. And I phoned Nigel recently, and he knows all of these people, and we could put all of their names. But I'm not sure if that's allowed legally nowadays. We'll have to discuss that with the lawyers. So the St. Luke's refinery. The St. Luke's refinery, this is an amazing story. It was set up by the Bank of England in 1920. They had this huge industrial operation in Old Street, just round the corner from the Bank of England. They had 30 Miller furnaces. They had a capacity of 30 tons of refined gold per month. This was enormous. This could refine all the gold coming from South Africa. And it closed down 3 months later. 3 months later, after producing about 5,000 bars, apparently none of which now exist. So, which is what this commemorative piece says. And when they started up their chlorine plant, they started refining all their old, not need to send any gold to Johnson Matthey or any of the other refiners in London to have it refined. So I think, you know, I could go through the other 98, but you probably don't want that. And one of the things that I want to do with our brains is to go through the items here, because really the items here are my personal choices, and I think we should involve a few more people than just me deciding what to show. And this is just going to be one part of the exhibition. The main exhibition will be the kind of thing that I showed before. So I think I will stop now, let you have your coffee.
If we come back in about 15 minutes, and then we have Bart Malek from TD, and Ruth is going to give an update on where we are with all of the various work streams going on at the moment with the LBMA. And then you should have some time left to put on your dancing shoes for this evening. Thank you. water bottle if you like. Okay. Okay, welcome back, everybody. We're going to move on swiftly. So our next speaker is Bart Melek. He is the Global Head of Commodity Strategy at Securities. I'm going to bring you up straight away so we can move on. Thank you.
Well, hello, everybody. I'm going to try to, I think I'm going to try to be interesting, but you never know. I am, as some of you may know, I'm head of global commodity strategy for TD Securities, which is part of the TD Bank Group out of Toronto. And we are quite active in investment banking and, of course, precious metals trading here in London, New York, and Singapore. My role essentially is to give the bank a bit of guidance of where commodity markets are likely to be and look at some of the key drivers in that market. I'm not sure who those people are. I don't think they look like any TD guys. None of us are that refined, though they look like they're fixing stuff. They're much more appropriate name for it. And I've seen our traders do it for the last couple of days. Seems to be a lot of fun for them. I'm not sure they make any money off it anymore, but they do enjoy it. This presentation is easy money, record debt, and an aging expansion point to global rebound. I will give the secret away right now. We are still fairly bullish on the gold market. We do ultimately look gold to trade near 1650 US dollars per ounce by the latter part of 2020. We see it coming off after that a little bit, but I think for now, it makes a lot of sense to go a little bit through the mechanics and the dynamics of this market. What got us here this year, why we have had a bit of a sell-off, and we'll proceed and go, and I'm going to try to convince you why it is a good idea to bet long gold. In fact, we just published our annual outlook piece, and we have a few trade ideas essentially telling the world, go long gold. So we always hope that people follow some of that. I mean, the great thing about being strategists now and the legislators and regulators preventing us from actually propping, it's all fictitious money. What we have now is model portfolios. And then if traders and other guys choose to do what we think, then they do. And we typically will recommend a view that we believe will make money, but now we can't actually lose any money. But if you follow it, you are at risk. Hopefully, it's been a good year so far. For us, we were in a long gold position that we entered 13% ago. So it was a good trade. We got in at the fair bottom, and then we got out a little while ago, and now we're waiting for an opportune time. And I think that's a pretty good time to start. So on this chart, you're seeing the yield curve, and what you're also seeing is the gold relationship. And this is quite material. Why? The year started off pretty lousy, but year to date, I think we are up 14.4% in gold. So some TTAs, those are commodity trading associates, algorithmic funds. We actually have constructed an algo, artificial intelligence, trend following algorithm that tells us where the turning points may be. I still have to say it's not the algo. I make the forecast. The algo is still not really AI. So any credit should be directed to us. Just if anybody asks, it's not the algo. It's the guys that made the algo should be getting paid. Really acquiring significant long positions right after the Federal Reserve of what they're going to do with interest rates. You know, for the longest time, they were talking about actually tightening policy. And then Donald Trump, God bless him, we love him a lot, mainly because we have another algo that tracks what he says, and that seems to work very well. So we are having a market that is predominantly algorithm driven. We don't see a lot of fundamental players in it. Certainly, we believe that as much as 80% of all trading in commodities is somehow touched by a machine, with 35 to 40% driven by CTAs, the so-called trend followers. So it is now increasingly important to look at those folks. But I think longer term, it's still the fundamentals that drive it. So what has happened? The Fed has moved into a view that essentially tells us that they were willing to stop this non-increasing rates, and they signal to the market that they are going to cut. Of course, during around the same time, we've had a pretty robust war on the trade front develop between the United States and China, where trade activity broadly has dropped significantly. We have seen signals that PMIs, manufacturing data, is looking south, and we were quite worried that the world might go into some sort of a recession, and the market started pricing in a robust probability of cuts. And that's when gold started moving. I have it in my notes here. You know, I always make notes because I'm paranoid I'm going to forget stuff, but we moved from the high 1200s to as much as 1557 recently, and then we have fallen off. So what drove it? The inverted yield curve on 2s and 10s, and I have a curve that describes all of them, turned negative. In essence, the cost of carry became quite conducive to holding gold in vogue. So we didn't see a lot of incentive to move gold. Yields all declined. All the factors pointed to stronger gold. And then, of course, we've seen tactical and strategic traders follow suit. And this is just what's of how Fed expectations, and this is in the Fed fund futures, shaped gold. So anytime the problem increased, we had a higher gold price. That jumped nicely. And I'm not showing the gold price here, I'm showing the S&P. So when rates moved lower, US dollar was bid at the same time moved higher, which typically doesn't happen. So it just shows you how robust the move, and I'll show you what the positioning. Now, before I do that, I just want to point you to the chart. And essentially what we're saying here is that the monetary policy or monetary policy or anything central banks do at this point is very inefficient. In essence, for any level of monetary injection in the system, we get, and this is a very important point to gold right now, is that given the fact that the global economy is likely going to function at below potential, whether we have a positive outcome or not with the US trade-China deal, the economy is slowing down. It likely means that the Federal Reserve, the ECB, and other central banks around the world will have to have a very $1 trillion of negative nominal rates. Now it's about 12. But what I was talking about, look at the very robust increase. This is in gold in our algorithm. So just as the Fed policy was changing, we've seen a big shoot higher of long positions or net exposure. That hasn't really changed. So even as we've seen gold trade off its highs, we still think it's extremely well supported at 1400, 1425. You know, when you look at all the option lotters and when you look at when people got in, there's still a lot of support there. We don't really think it'll breach it. And when you look at the CFTC data from the US commitment of traders reports, what we've attributed the decline in prices is really by new shorts. The longs haven't really escaped yet. They are still robust. They are not near the peak, but we've seen a fairly strong positioning on the long side. So it's been unadjusted in short positioning. So the nets moved lower and we had some technical triggers moving it lower. But when we look at the CTAs and the long-term trend followers, they are still net long gold. And there's really no reason to think they're going to switch positioning anytime soon. We would have to see significantly lower prices for the long-term trend follow algos to move. So as I was saying, the global outlook may very well depend on how well you see the US and China deal with their trade problems. And you know, it was very hot and encouraging yesterday, but then Mr. Donald Trump said something and we had this rally yesterday. So these macro factors are extremely important. I think real rates will continue to be lower. And that is even in a scenario where the Fed doesn't cut. If the US Federal Reserve sees that inflation is moving, settlements said that we could very well be in a liquidity trap globally, meaning, you know, you're pushing on a string. You're going to have to do something other than just monetary policy to get the economy going. So even if things are okay, that economy is, global economy broadly, US economy specifically, will likely go below capacity. So there will be very little reason to increase rates. And when inflation isn't a problem, in spite of a positive thing for gold, it's not so much inflation that matters. It is what the monetary policy administrators want real rates to be. So it's their responsibility. If inflation is low because growth is sub-potential, chances are they will try to steer interest rates into negative direction. And that has been a very good thing for gold. And you know, the very interesting question now is, why hasn't gold done better? I'm a little surprised how well it is holding up in this environment. And right now, I would have thought it should have gone maybe another $50 lower to our support levels. But there is a very strong resiliency. And all I'm showing here is who is negative in real interest rates. And that's pretty much endemic everywhere. And when you talk real rates, it's pretty much across the board. And that includes the US. I like to go look at gold in a portfolio, you know, from a perspective of total portfolio. And equities are very important. So to me, the signal will be not only lower interest rates and maybe a weaker US dollar, we're also gonna have to see some volatility. And to me, the volatility, something like the VIX, have again all three elements signaling, you know, the need for a hedge such as gold. One, low interest rate, somewhat weaker dollar, we think, and volatility. And I don't make judgments on equity markets. I'm not going to tell you that equity markets are going to be down 10, 15. It's not that I don't have an opinion, I just don't share it publicly. And the good thing is, that's all I need to Jesus. And then it's not a benign, you know, kumbaya world. It becomes where gold flourishes. And the risks in that world are that central banks will deliver even more quantitative easing and lower rates. For the record, it is the TD view that the Federal Reserve cuts 2 more times. Despite of what we were hearing, that what trade can do, that's already been set. The damage has been done. The question is going to be how much more damage are we going to see? Not that there isn't any damage. So we expect January, February, the US to manifest a lot of. That is the big macro view of why we like gold here and think that 1650 is a good time, though I think we formally said we should enter a little lower near our resistance. So maybe a little bit short-term pain for a glorious future, as some would say. In addition to the big macro interest rate story, the RMB story, and opportunity cost story, we've seen gold, I think, and particularly in central banks right now, being driven by the fact that debt is massive and monetized. So, I called it in one of the articles, echoes of Weimar Republic. I hope not. I don't want gold to be, higher that badly, because I think bad things that can happen from it. But right now, I think the latest report is showing us $255 trillion of debt, something 330% of global GDP. That's massive. In the United States, our Americans are generating $1 trillion worth of deficits every year, 4 to 5% of GDP. And this is when the economy is hot. The problem, of course, is going to be what happens when there is a slowdown. Well, that 1 trillion could go higher. So I think fear of long-term monetization, and it doesn't have to be anything crazy, but QE is a form of it. If they buy securities, then keep them. That's quantitative easing and de facto monetization. We could very well see real rates being kept lower in order to keep government solvent. There's a lot of unfunded liabilities. I mean, we can talk all day about the trillions of dollars of unfunded liability there is, but that is something to keep in mind. And we've already seen record central bank buying. And I think part of those fears, along with the possibility that the US may not be as dominant a currency in its hand and is using the payment system as part of, that's part of their political policy to punish foes and maybe not so much reward friends, because I think the friends got punished as well. But that's something that I think long-term could happen. And the concern of monetization, in my view, has seen that certainly for the last few years and general trend, that's that bright green line, FX reserve in US dollars have been trending lower from 20 years ago at 72%, now 62%. That's meaningful. And that's, I think, has been in a great way replaced by gold. Last year, we had the highest purchases by the official sector in over 50 years, 647 tons, I believe. I have it in my notes again, but yeah, I think I remember. This year, we think maybe 700 tons or so. And that is a very unique gold in vaults. And still on the demand side, when we run our models, we're still looking at positive growth and considering the fact that miners aren't, they're buying each other out, but they're not actually investing in a lot of new capacity. So what we could very well have for the first time in quite a long time, a situation where gold doesn't flow from inventory into the broader market because of the financial and macro environment. So it's a very nice world. You have central bank buying, keeping demand high. You don't have that leakage from vaults, some of those nasty bankers who trade, I don't know, any, and we continue to have demand. So it makes it for a fairly robust environment. And central banks globally have still a lot of room to go. Russia has been in the news as being the big buyer. I suspect they very well may be using gold to secure dollars, but that's neither here nor there. Mexico, Saudi Arabia, mainland China, very small proportion of gold in their asset base. And we do track of what they're buying. We look at it. We suspect there's still appetite. It hasn't been as great as we've seen previously, but I think when you look over the long run, that is going to be a trend that is with us for quite a long time. And a low interest rate environment. Again, it just shows you where gold here is outpacing FX reserves. So we have essentially gold doing better than FX reserves. So it's growing at a faster pace than FX reserves broadly. In fact, recently, mainly because of low oil.
Thank you. Well, I'm Ruth Kroll, Chief Executive for the LBMA, and I've been spending a lot of my time these days speaking to folks outside with friends and family today, because you know some of the basics, and I don't have to do too much in terms of who we are and what we do. But I thought I would update you in terms of what's in store for next year and also what we've been up to, partly because at our AGM, Stuart Murray usually comes along and it's a good point for me to check in as to how I'm doing. And he wasn't able to make it this year, so your briefing is here. Authority for Precious Metals. I like to say for the industry, we're here to solve problems. And certainly one of those was the challenges we had with the price back in 2014. And certainly we were at the heart of leading the market through that. A lot of people helped. It was certainly a team effort, but certainly is a good example of what LBMA is all about. One thing we've done in the last few years in terms of the board, moving from a management committee to a board, is a focus on strategy, focus on risk and a focus on strategy, and where do we want to be in 3 years' time. The work into 5 main pillars. I see one side is everything physical on the market, so the good delivery list enhancements, and then everything financial. We tend to be right in the middle of those two worlds, but there's definitely the extremes on both sides. So one, it's sometimes getting them to talk to one another. Go through all the bullet points, please don't be worried. But if you have questions, we're happy to talk about it. And we've done, this is the less complicated slide, which shows you in terms of all the major work streams when we're looking to deliver them and particular projects. Speaking of particular projects, if I talk about the physical side first and foremost. So this is the good delivery list. We're best known for this in terms of ensuring metal quality of the underlying metal in the London marketplace. But I think you'll all know it extends to the full production of a good kilobars, also in terms of dialogue between major centers like China. And that's certainly in the plan of what we're doing. So first and foremost, it's having an updated kilobar standard for the international market that engages with the Chinese, and that'll be coming in the next month or so. And this is really at the heart of one of the problems facing the industry when it comes to fraud, as well as where has my material come from, but more on that. We are launching, I'm very, very happy to say, what we call internally the Vault Operator Accreditation Scheme, but also known as Vault Training, next week. So it's been a long project, as Stuart and Rebecca will both know, as they were both there when we started down this road. But I'm very happy to say that is going live, certainly for the London Vault and the members. And the intention is, one, in the trading aspects, we're looking at how can we create more of an even playing field when it comes to accounting. So how precious metals are treated with internal trading. And that creates some strange dynamics within the industry, which we had consistency. One, it's transparent, and two, it makes it a lot more even playing field. But I would say the major thing we've been doing is the trade reporting, which if you haven't heard about all of this, we celebrated our 1-year anniversary for the first time in over 300 years of trading, that at a minimum, there's a daily average volume of $50 billion a day. Some people might say that's too little, some pigs might say it's too big. I think it's, what does this new data tell us? We've ran liquidity studies, which are explaining how liquid gold is as an asset class. And we're using that data regulators, particularly when it comes to Basel III. So in terms of net stable funding ratio and how to inform that debate. But I think holistically, what's interesting is how the gold market compares to other reserve assets. And that's where my speech is to, say, the Forex markets and to more central banks who are perhaps not as familiar with gold is very interesting. So here we talk about the average daily volume for the global gold market. So this is LBMA, COMEX, Shanghai Futures, Shanghai Gold Exchange, and others. And it's about $107 billion a day. And what's interesting, if you then compare it against US Treasury bills, EU sovereign bonds, gold stacks up pretty well. And I think that's something that starts to get people interested in the data and wanting to learn more about our market and our industry. I think there's more that we can certainly do. And again, that's what a lot of the creation of this data has been for. And we compare against other government bonds. Also, in terms of the question of ratio of how much gold compared to how much traded, it's very healthy numbers, particularly for the gold side of things. That's a trade volume in the London stocks. Silver is a different story, but volume in price tranches. So this is trying to give some further transparency as to where everyone's trading. All the data is collected trade by trade, and it's published in an aggregate way, but it's giving further transparency than just market size. So there's all sorts of interesting data, including option strikes, if you haven't seen it, as well as daily average by product. So we have all 4 metals there. And then usually it's my plug as to where you can go get some and have a look, and hopefully coming soon on Bloomberg and Refinitiv, but we'll be to let you know once that's gone live. I think when we launched this program in 2012, I have to say naively, I thought it would be maybe a small role that we would play, and I wasn't really convinced we had to approve that. I also think consumer expectations and public expectations on all of this continues to grow. So for us, it's about how we, I think specifically for this market, we're looking called gold bar integrity. And that's how do you know the life story of, and then how do you know that that life story ties up to that specific piece of metal? So all sorts of interesting technology out there that can do these things. Sometimes there's solutions looking for problems. But one thing we have agreed is that the idea of the LBMA holding a centralized database for bars is something that will allow these technologies to flourish. And that's what we want, is to create competition and help give more transparency, but also recognizing that there could be some disruption in terms of what the demand for types of bars are, and thinking ahead of that as opposed to getting caught out. So keep up with demands when it comes to things like human rights and the general sustainability agenda. So we're having a special summit focused just on this in March. First in the morning talking about the problem, then in the afternoon talking about some of the potential solutions, and really trying to make sure that we're leading and getting ahead of this. For those of you who aren't familiar, the EU conflict minerals regulation in place in 2021. We still have some work to do there. We have to make sure our program gets recognized. But compared to industries who haven't been across this, we are in a good position, partly because we're on version 8, not version 1. I'm speaking to, when I mentioned the Forex community, gold, other than it's a bit shiny and probably James Bond, and there's that. The main thing they said, oh, you guys had that problem a few years ago with the gold fixing scandal. So, you know, a lot of the point of this year is to get the message out that there have been fundamental changes in terms of the transparency piece, in terms of the oversight, but ultimately is a tradable auction. And we do specifically not use the F word, mostly because my fellow compatriots think that something's wrong with the word fix. And it is an auction. So explaining to them how it works, where they can find it, where they can view it. We have the live demonstration on the watching this in terms of how many people are captivated because they can that for the first time they actually understand that you're canvassing global buy and sell interest, and that you're finding an equilibrium price. And it's really nice to see that finally getting across to people. And it's important we continue to do that. I had some more data if there's interest in terms of how much volumes go through for gold and silver. It's quite a lot. In terms of the daily auctions, it's obviously smaller than the larger market, but this is meant to be a real tradable window, which it certainly continues to be. And the participants have grown hugely, so and going to be up to, but I'm happy to take your questions. Otherwise, it's our first time repeating a conference venue in, I think, potentially ever. Yeah, it was a hit, so I'm gonna bring it back. And I don't know at that point, Rebecca, do you want me to introduce the video, then we crack straight in? Okay. So we have done a little bit of a video, which I actually even haven't seen, which is from the 12th, for those of you who were interviewed. A compilation of that important occasion. For those of you who weren't there, we wanted to mark the occasion of the first ever gold price at the spot in which it happened. So we were very kindly hosted by Rothschilds, and many important people from around the market, both past and present, gathered. And I think hopefully with this, I will get it going.
Well, it's really great to be welcoming everyone here today at Newcourt on the centenary of the first ever gold fix in September 1919.
I have to say that this was my first interaction with Rothschild. I know many of you in the room will have worked here, or maybe Johnson Matthey bankers, which tends to be in terms of the options of history. But I have to say, working with Rothschild, it's been nothing but class, and I sincerely hope it's not my last encounter. So thank you very much.
We had a trading room of 6, 8, 10 traders, each with 2 phones to their. We had 3 telex operators, each with a couple of machines. So that was 16 clients, and probably a couple, 2 or 3 other guys with phones on the outside desks. So probably 20 customers. And I can't remember how long the fixing took, probably half an hour. The price movement during that fixing was probably $10. Doesn't sound much, but the absolute price was only 180.
Ever since I joined the firm, it was really something that was very much present in people's minds, particularly since the gold price, when it had been fixed or agreed, was then written on a little card and put in the reception area of Newcourt. So people saw it every day.
In the middle 2000s, I was head of foreign exchange at the Bank of England, and I was fortunate enough to be invited to the last meeting of the gold fix that took place as a physical event, with the heads of the desks in the same room with little flags going up and down.
Price, based in London, was having so much impact on this small community in the middle of the Nevada desert, and that this one community lived and died basically by what happened with the gold price. There was a pre-1919 market that involved the bullion firms, and then also sort of tracing how the ritual that seemed like it had been there forever, how it had slowly developed over time, and tracing the significance as well in the 1930s, 1960s, and the gold price in the 1980s, how important this price had been for the world and for people over it.
There was a big storm in England, savaged the whole of the southeast, and trees were down everywhere. And so the question was, are we going to hold fixing this morning after this great, great storm? He was able to supply some, but only because he'd got an intern from their office in Australia. Now, of course, he didn't know anything about the fixing or how it works or anything. So we led him through it, and he said, well, I think I want only bars it was. And I said, you can't do that. He said, why not? I said, it's too small. You've got to have a bigger order than that. You either don't put in an order at all, or you double it. So he said, okay. And he doubled it. And that was fine. And that was how we fixed the price the day after the big storm.
I used to get people across from the LBMA, whose office was just a few hundred yards from Rothschild's office. We would have these visitors from all over the world, most often China, usually about 10 of them, would come into our office. They wanted to see the fixing room, and I would take them over to the fixing room en masse.
We had a choice of client or type of financing. We always would try and our USP, our centre of excellence was gold mine financing, and we really excelled in that. We had our own engineers, we had our own specialists who understood the market in terms of selling gold, hedging the gold, and so we really. It was a sort of A to Z of involvement in the gold mining industry, and I'm very lucky that even now today I remain involved in the gold mining industry as a non-executive director. So it's been a fantastic experience for me.
And I had one slide which I developed about the fix, and it was to try to show how this one price was the equilibrium price that was the price at that particular moment, with participants all around the world who were feeding in their wishes, either to buy or sell gold. And the 5 companies whose logos I had on this slide were the focus of all these requests to buy and sell gold. And you got what I thought was this fantastically important equilibrium price for gold twice a day. And I thought it was a great word, fix, or the fixing.
So I started in the gold market in 1989, so quite a long time ago. And in those days, there were really very few women in financial markets. And I joined Rothschilds and worked on the trading floor, actually developing their options business. And indeed, I remember actually chairing the gold spot fixing in the panelled room. I think I was the 3rd woman to do that in the 1990s.
Start 1, 2, 3, 4. New price 1, 2, 3. You're buying 10,000. You're selling 10,000. You're buying 6,000. You're buying 200. You're buying 4,000. You're selling 10,000. You're doing this. You're doing that. So my little room, at the end, I scratch it all up and I come up with a number, which is our net number. And I put that number in to the fixing room and then Rothschild.
There was a community. People would meet at least 3 times a day between gold and silver, see each other. And then when it moved to the call, there was still a call once a day. So it was quite a poignant moment in terms of coming together for the last time to really speak, because while you have the transparency, of course, on the platform, it's very efficient, it's very transparent, it's very useful. Some of that community was lost. The first fixing ever in 1919 was actually on the phone. So it was a conscious decision to have that in person. And so it's one of those things. I think the gold market gets criticized. Do they keep up with the times? But sometimes it's a purposeful move to want to have the face-to-face, that people stand up and be accountable.
After September 11th happened, I remember thinking this is going to be, a big period for the gold price and how it hit historic lows or historic highs. And part of that too, even within ELCO, again, the importance of the price on the world was that this community was the United States in 2008 was going through the Great Recession. The financial crisis had triggered people losing their homes. It was devastating. But in Elko, Nevada, it was booming. And the reason it was booming was because the gold price was increasing. So I think that it really speaks to the importance, again, what originally drew me to the market was the fact that this one price and this market based in London had such a dramatic impact on places that maybe the people in Elko never knew about it. But at the same time, this price was determining how their lives would be and what would happen.
I joined the gold market in this building in 1966, when the gold was fixed at $35 an ounce and life was pretty dull. When I joined the dealing room here, I was a bit of a rebel. I was the only one in the dealing room who didn't wear a bowler hat. The level of demand that developed in 1968 was unprecedented. That exciting fixing on the 14th, the demand was for 14,180 bars of gold. That is, I think, 8.6 billion by today's standards. So to get the permission for Air Mongol to fly the gold into London, we had to contact the Foreign Office, Civil Aviation Authority, the Department of Transport, all sorts of people. It took ages to get the permission. And normally flights coming into Heathrow, I think it's about 30 seconds difference between the plane. With this, they said there must be at least 3 or 4 minutes to make sure that this Air Mongol plane gets down. Anyway, it did. And I was there with Brinks, and they would not release the gold to Brinks unless I was there. I had to be there and sign for it from the deputy governor, I think it was. So anyway, the gold was loaded up. He signed, he was happy, it was me. And then we got on into the truck. Brinks took it away, and I came back very relieved.
I have seen the gold price mechanism change dramatically in my lifetime. I've seen it move from a room down to a telephone system, which had a really strong network around the world, and then onto a platform, onto the gold price fixing platform that it is on today. And I can indeed remember actually being on the telephone working with clients for the longest ever gold fixing, which lasted over 2 hours, and how much of a strain that was, but also how very interesting it was to see the whole world's flows of gold coming through London into the gold price mechanism.
I was a coxswain in a sort of college 8s and 4s and so forth. And in February 1979, we won our oars, which basically meant that having done very well in that particular tournament, all the oarsmen were entitled to go and buy an oar, which was embossed with the names of the crew. I, as the coxswain, got the easier bit because I had a rudder, which is much smaller and much easier to carry about. At this point, of course, gold was starting to go bonkers. Yours truly, as an impecunious student, went to buy my rudder, which was embossed in gold leaf with the names of the crew and the coaches and all the rest of it. And it cost a fortune as far as I was concerned. And when I queried it, the chap who was doing all the work for me, and we're now in about May 79, so things are moving, he said, "I'm awfully sorry, miss, but the gold price has gone mad." So I paid my money, and I've still got it, and I'm very proud of it. And it was my first exposure to the gold market, and it hasn't left me since. And that was 40 years ago.
I come from a market which was the interest rate derivatives market, which was a market where it's very non-physical, very material. Precious metals was, on the contrary, very, very physical. And getting to talk to my counterparts and trying every day to find the right price for gold that day with the buyers and sellers and find the right price for it was great to be able to talk with people.
So I think the Monday, the 1st of October. Overnight, Johnson Matthey Bankers, one of the 5 members, had gone bust. During the night, there was a discussion as whether we would allow Bank of Nova Scotia to become a member of the fixing, having bought Johnson Matthey Bankers. But that deal fell away. So the Bank of England had to step in. So here we were on Monday morning, 5 members of the fixing, but one of them was bust. And nobody knew what was going to happen. Did it make any difference? It made no difference at all. We just carried on as normal and fixed the price. And so that was a memorable fixing because nothing happened.
Talking about the hedging strategies of their gold mining companies. So people who may, they're not in the realm of finance at all, but they understood not only that the gold price was important to them and they did check the gold price every day, but also that how the hedging strategy of their gold mining company actually impacted their life and even impacted the price. So I think that, there is something extremely powerful about prices set in a financial center and sort of the dramatic impact that they can have around the world on communities that, whether they know about the market or not, what happens in that market has dramatic impact on what they do and how their lives are lived.
The way how globally it's done across the market, and to see that you have people calling you from central banks from, for example, Asia, who would like to buy gold, at the same time having clients on the other side who come from the Americas wanting to sell gold, and realize how global it is.
Happy birthday, gold price. Thank you so much, everyone who took part today. There's something so special about being on the space where the very first London gold price took place 100 years ago. Thank you to everyone who spoke, everyone who gave their testimony, and everyone who celebrated worldwide. Cheers.